Hey, and welcome to my Precious Metals Focus YouTube channel. In today's Precious Metals Mining and Royalty Company Focus, we're going to look at Gold Royalty Corp. And let me tell you, if you haven't heard of precious metals royalty companies in the past, then this video is definitely for you, as in my opinion, they offer a terrific way of diversifying into the metals and mining sector with less risk than investing in the mining companies directly. So let's go ahead and discuss this company today and royalty and streaming companies in general, as they tend to be a high consideration amongst stackers and holders of physical precious metals whom tend to be more risk averse. In this video, we'll define what precious metals royalty companies are and listen to CEO David Garafalo discuss the business and how Gold Royalty Corp is poised for further growth and financial success during the ongoing Fed tightening cycle. All right, everybody, let's get started with that. All that plus more when we return. Hey, everybody, and welcome back. Thank you for viewing today's video. While I love saving wealth in physical silver and gold coins, that is the primary focus of this channel, I, like many of my viewers, also hold a job with a 401k, and that 401k does provide a company match. I also enjoy investing in a Roth IRA. It's something I've done for a couple of decades now, and I realize right away that a group of stackers and viewers in this community are immediately put off by these types of videos. So upfront to you, my many wonderful viewers, if buying and holding equities in the mining and metals sector is not of interest to you, then you've been warned. That's what this video is about. Please come back for an upcoming silver and gold unboxing video, and I thank you again for your time. All right, so I love gold and silver, and I do spend a lot of time reading about the market, the economy, and how to gain wealth in this sector. And I do appreciate you sticking with me today as we talk about Gold Royalty Corp. Now, Gold Royalty Corp is on the New York Stock Exchange and is listed under ticker symbol GROY. Ticker symbol, that's the word. Now, if you want some gold exposure that also pays a dividend, okay, this company is a unique opportunity and one you might want to look into, all right, because they do pay a dividend. Now, I've covered Gold Royalty Corp on my channel. I did so back in June of 2021, so it's been a little more than a year. Today, we're going to focus more on the company's leadership. We're going to focus in on a video by David Garafalo, and he's going to provide an update on some of the new developments, the projects, and the revenue projections for the company. I'll also have some links to the company website and a link to the original coverage of Gold Royalty Corp that I did back in 2021. So go ahead and check out the video description section for that. Let me start out, before I go any further, by loosely defining precious metals royalty companies and how the business model operates, especially for those that are very new to this. Okay, so gold royalty or precious metals royalty companies are not directly involved in the exploration or extraction of actual precious metals from the earth, all right? So it's not the actual mining company here. Instead, they do operate in the sector on the financial side of the business by offering financing to mining companies at various stages in the process. So from exploration and discovery to full-fledged production operations, all right? Now, these royalty companies, like Gold Royalty Corp here, they offer favorable and unique terms specifically designed for the industry. So they offer repayment options that often involve cash and certain mineral rights collectively, so that the royalty company kind of has a stake in the game in the actual mineral ore that's being extracted from the ground. Now, many royalty companies, such as Amir Adnani's Gold Royalty Corp, lend capital, lend cash, dollars, Canadian dollars, to these mining companies in exchange for repayment in cash at an interest rate, right? So they're going to earn interest on that repayment. But also a stake in the sale of the gold or other precious metals that the mine brings to the market. All right, so think about it this way. You found gold, you want to dig it, you need equipment, a team, capital to keep things running. Your employees need to be fed, and the equipment needs to constantly be fueled. You're going to need financing, but you know you're sitting on a lot of gold that will handily repay the debt. There has likely been assessments of the amount of gold in the ground. So at this point, it is estimated, how much potential wealth lies down below. Now, traditional financing isn't interested in this level of risk, especially on the timelines that it can take from discovery to the actual metal making it to market. Spot price fluctuates. Banks aren't too fond of doing this, but precious metals royalty companies are. Okay, your new mining operation now. You've gotten cash from Gold Royalty Corp. You're beginning operations, you're bringing metal to the market, you're repaying the royalty company in cash as if you were repaying a car loan or a mortgage. But this contract also calls for a stream. Let's talk about the difference between a royalty and a stream, because you can see both of these in this particular business model. Now, a stream is where the company actually gets a percentage of the actual ore that comes to ground. So, perhaps during the last month, 100 ounces was brought to the surface. Perhaps 5% of that, or 5 ounces, would immediately be in the asset column, right? That would go to the actual stream or lender in this particular situation. So the mining company itself is repaying cash, plus they had to hand over 5 ounces of gold. So a lot of these things can be built into these contracts. Oftentimes, it's mostly settled in cash with the royalties, where they have a favorable terms where they can perhaps get 2 to 5% of the profit on sales of gold sold on the market, stuff like that, in order to make investing in these mining operations a little less risky for the lender, right? Because not only are you getting the cash back, which is unfortunately inflating, but you're also taking advantage of the inflation protection that gold offers at the same time. So let's talk about the leadership team here, starting with David Garafalo. He's the CEO of Gold Royalty Corp. Now, David is famous in the industry as the former CEO of Goldcorp and also the mastermind of the Goldcorp and Newmont Gold merger. All right, so this merger was the largest in the industry's history and came in at a valuation of $32 billion. All right, so that's up there. Now, after leading one of the largest gold mining companies in the world, David does bring incredible experience within the industry. He's operated in the industry his entire professional career. So he has an immense number of contacts throughout the metals and mining sector, and also has worked with so many wonderful people in the past. So he's able to build a real quality team at Gold Royalty Corp. So let's take a minute to listen to David now speak about the opportunity in the market for this business model and how healthy the company is to fund the exploration side of things. Namely, that's a part of the overall mining operation that is grossly underfunded, or has been. All right, so Gold Royalty Corp is set to fund the exploration side of things. Let's go ahead and get to that now.
Look, I think we're at a really, really interesting point in the metal cycle right now. We've gone through a number of years where mining companies, both in the base and precious side, have been focusing on deleveraging, harvesting returns on their existing assets after having spent billions of dollars in investing in new mine capacity about 10 years ago. And that was quite a party, and there was quite a hangover. And obviously, investors demanded that they focus on deleveraging, returning capital to shareholders, increasing dividends. And the industry's never been in better shape financially. They have squeaky clean balance sheets, effectively net zero debt across the industry. What's been lacking is investment in exploration and development in any meaningful way. And that's why we've seen a consistent downward trajectory in reserves on both the gold and base metal side for the last half a dozen years or so. So that's coming to roost now. The industry is going to have to, out of existential need, reinvest back into the ground to replace depleting reserves and production. And in that end of the cycle, when you're starting to invest in exploration and development, royalty companies play an extremely important role in the ecosystem to finance that development and exploration, particularly for the emerging producers, the explorers. And that's really a niche that we're trying to fit. And to achieve that, though, you have to have a low cost of capital. You have to have scale. You have to have liquidity. And there's been a proliferation of royalty companies that have come into the market anticipating the need to reinvest back in exploration and development in the coming years. But what they haven't achieved is scale. So what we've tried to do in the last 6 months, really, since we IPO'd in March and raised $90 million US on the NYSE, is to create that scale rapidly so that we are competitive for our partners in providing them capital on a cost-effective basis so they can invest back in exploration and development.
So David goes on to discuss several acquisitions and how he and the management team have already managed to double the size of the company relatively overnight during 2021, within the first year of the IPO. And I'll have a link to the full video in the video description section below if you want to catch all the details. Now let's listen to David talk about the overall portfolio of royalties and how it's continuing to grow, along with the revenue projections. That's very important as a potential investor in the company, and also the unique benefit that his company has in the metals and mining sector over traditional mining companies. Okay, so this is a 6-minute watch. It's a great listen. You'll actually come out of it knowing quite a bit about the operation, the projects, and the projections going forward. It's a great watch, and we'll really introduce you to the company, its projects, and how it earns cash. So let's get to that.
This just gives you an overview of the portfolio. America's focused exclusively. 191 royalties, 6 already producing, and you'll see in a moment we have significant upward trajectory in our cash flow projections over the next 5 years, 7 in development, which will be cash flowing over the next 3 to 5 years, and you can see a broad array of assets from early stage exploration through to feasibility study, which will be populating our pipeline, I would say, for decades to come. So we have growth already within this pro forma portfolio as a result of the 3 mergers that we expect to complete over the course of the next couple of months. And in some very good jurisdictions, which I'll touch on a little later on. Canadian Malartic, it's worth spending a bit of time on this. This is really, as I said, a foundational asset. It has the potential to move the needle for us, much as it created that foundation for Franco-Nevada, which is now obviously the category killer in the royalty space. This has that kind of potential given its long life, its geological prospectivity, and it brings me back home. This is where I started my career back in the 1990s, initially building the Torelos deposit up in Chibougamau, and then as CFO of Agnico for 12 years, building LaRonde, building Goldex and Lapa, all within tens of kilometers along the same Abitibi-Greenstone geological district. They've been mining from an open pit for the last 10 years. Agnico and Yamana has as co-operators. Now they're investing at $1.7 billion to build an underground mine to exploit a much larger resource. There's 4.5 million ounces of gold reserve here. There's a potential of $6 to $8 million of additional resource, 6 to 8 million ounces, of additional resource, which will significantly prolong the mine life. And that underground potential, as it's opened up for operation, you open it up for exploration. And that's been the history in this district, this geological district. As you get that deeper infrastructure in place, you not only get infrastructure for operation, you also get drill setups for exploration. And if I look back at the flagship operation of Agnico today, LaRonde, which I was on the team that built that operation back in the 1990s, that started out as a small zinc deposit delineated from surface. We sunk a shaft, which ultimately went down to 2,200 meters below surface. They're now mining down to 3,000 meters. But as they started to get lower horizon drill platforms in place, that deposit ballooned in size. And that's been the history of this geological district. That underground access is so important, so vital to really delineate what you have, to really explore the upside potential geologically of what ultimately you can mine here. And so as Wenzel Habicek, who was our VP of exploration back in the 1990s, used to say, you always get surprised when you get underground in these deposits in the Abitibi, and always in a positive way. And the good news for us, you can see this patchwork of royalties we have on this property, and we have royalties across all the near-surface potential exploration targets, but also the 3% target NSR target you see in the middle of this map, this aerial map here, is where the Odyssey mine, the underground mine, is being developed. So as it trends deeper down dip, we see the potential to have more and more royalty coverage on this property as they delineate the underground reserve and grow that resource over time with the increased access that the underground infrastructure affords them. Within our existing portfolio, I'm glad to say that we added 2 really interesting assets. Ren in Nevada, I talked about, ironically, about Canadian Malartic being our Goldstrike. Well, we actually have exposure to Goldstrike through Ren, a property that Jerry and Trey picked up when they ran Ely, and it represents the underground extension of the Goldstrike deposit. And Barrick and Newmont have committed to exploring that and integrating into their mine plan in the medium term. So it demonstrates, or it represents, a meaningful source of cash flow growth for us in the medium term as they optimize their mine plan with this rent extension in place. Back in Quebec, recurring theme, Quebec, Nevada. You'll see a little later on, this represents a significant proportion of our overall portfolio. Fenelon is a multi-million ounce potential deposit. In the last several years, Wallbridge, the operator, has drilled 300,000 meters here and then ramped up their exploration program dramatically this year to $71.5 million, or another 170,000 ounces of 170,000 meters of drilling and 10,000 meters of underground development, all culminating in an initial inaugural resource a little later this quarter. And so that's going to be significant news flow, and again represents a potential source of significant revenue growth in the medium term within this large-scale portfolio that we have within Gold Royalty. This gives you a bit of a schematic view of what our revenue growth is expected to look like over the next several years. What's not included in there is a significant amount of investment income that Abitibi has been generating from its portfolio of shares in Agnico and Yamana. They've been writing covered call options, collecting dividends on that. We intend to keep that as part of our cash and marketable securities, and that will be incremental to what you're seeing here. But what you're seeing effectively over the next 5 years is at least a five-fold increase in our revenue profile. And that's the most pronounced in the sub $1 billion royalty sector. So lots of significant growth. And we do this with a very, very small team, about a half a dozen employees. And I'm confident to say that we could run a business 10 times the size with the same human footprint. And that's the beauty of the royalty business. It gives you that top line exposure, leverage the gold price, leverage the exploration upside with the scalability with a very low G&A footprint. Without the exposure to the underlying risk of operating capital cost inflation, which is a very real risk at this point in the cycle, in my view.
All right, so if you're still here, you saw some pretty strong revenue projections that could do well for investors going forward, along with a lot of great royalty spread throughout the mining life cycle, from those initial discovery type royalties to full-fledged operations that are actually providing revenue right now to Gold Royalty Corp. Okay, so the main message for me is that an industry leader with a capable team is building a growth-oriented business in the mining and metals sector that is focused on quality partnerships and continual acquisitions to meet their business growth model. They're looking to pick up cheap stuff that's got a good valuation, good projections, to really grow the business, all based here in the Americas in several of the world's friendliest mining districts. We're talking United States and Canada here. It doesn't get much more friendly than that. The company once more owned by Amir Adnani, who has a track record of success. I've covered several of his companies: Uranium Energy Corp, Uranium Royalty Corp, Gold Royalty Corp. And this company, I can't say it enough. It also pays a dividend, all right? And that's a pretty big deal for a growth-oriented company in the metals and mining sector to pay a dividend. That goes to show you that the balance sheet is strong, that they're able to continue to invest capital and grow the business while also providing those dividends to the shareholders, all right? So with price targets that are nearly double the stock's current valuation, there is growth on the table here, and also that dividend. So for those of you that are interested in a lower risk opportunity in the metals and mining sector than that of traditional gold and silver mining companies, perhaps you've got a 401k like me, or you want to put a little cash in equities in your IRA or some other brokerage account. This company is on the New York Stock Exchange, so you don't have to go over the counter here. You don't have to go to those kind of back alley brokers, if you know what I mean. Available at all the traditional, brokers that you can think of. So if you would like additional information on Gold Royalty Corp once more, then please see the video description section with links to the company's information, as well as more of David's presentation about the company and its direction. All of that is down below for you to access. Thank you again for viewing today, and I'd also like to thank Gold Royalty Corp for sponsoring today's video. Really appreciate it. Really impressed by the leadership and the business model here. Okay, guys, I'll be back soon with another unboxing of physical precious metals. I hope you liked my last unboxing and discussion, and I'll share my views, as I always do, on stacking, and I very much look forward to doing that soon here on the channel. So take care, everyone, and have a wonderful day or night. Thanks again for viewing. We'll see you soon.
Thank you for watching our video. I hope you subscribe to our YouTube channel.